Lee Shapiro, the Chief Financial Officer of Livongo Health, the ticker symbol LVGO, and I see the stock is up 1% today. Great to see you. How are you feeling about the company and the outlook? I know you had a good quarter, and your latest numbers, you had a beat, and you saw growth for revenue, and you raised the guidance too. So far, so good?
So far, so good, Nicole. Thanks so much for having us on today, and really appreciate having the opportunity to speak with you a bit about Livongo Health. We're a very different kind of company. We started the category of applied health signals, which allows individuals to understand how they can best manage health on their own. And as you know, none of us want to be patients, but we all want to be healthy. And we provide the guidance and the opportunities to do that, leveraging information that you're willing to share in a very secure and private manner that allows you to interact with our coaches and to provide a basis for you to understand through what we call health nudges, opportunities to improve your health. It's interesting. It's interesting that Google organized content and Amazon organized commerce, and what we're doing is we're organizing health for consumers, and we believe that there's a tremendous opportunity for us ahead.
Right, and you know, I like the concept, right? And so it's my understanding you got your company's largest contract recently, right? Tell us about that and how you will continue to do that.
Yeah, we're so pleased. We announced at the middle to end of last quarter an agreement with the Federal Employees Health Benefit Program that allows us to provide our services for diabetes management to individuals who are members of that program. And that provides us with a great basis for growth into the future and confidence going into 2020. It's the largest contract in Livongo's history. And as we discussed, it provides us with revenue visibility to $50 to $60 million of revenue over 2020 and 2021.
There are plenty of people that won't touch a company that doesn't have profitability. I mean, I know we've had an exciting year of IPOs, you know, including your company, but, you know, Uber and Lyft. And but you're on the path to profitability, seeing profitability in 2021. Is that right? Can you explain that?
We do feel confident that we'll cross over into EBITDA positive in 2021 on an adjusted basis. And the key for us is that we have a massive market opportunity. There are 32 million individuals in the United States with diabetes, and unfortunately, 500,000 new cases are diagnosed every year. We have over an $18 billion addressable market in diabetes, and we've also launched into other conditions that we manage as well, such as hypertension and weight management, pre-diabetes, and behavioral health. And what this allows us to do is to now address the needs of individuals with over $47 billion in addressable market. So significant room to grow, and we'll be investing into that growth curve going into next year with that turn to profitability in 2021.
Also, I wanted to ask you about when you talk about the competition and the space, what differentiates your company from competition?
So our biggest competition is inertia. And again, focusing on individuals with diabetes for a moment, they typically have been using a meter to measure their blood sugar levels, which is so important for individuals with type 1 or type 2 diabetes. But that data is locked in that device. And they may remember to take that device with them to see a doctor periodically during the course of the year. But how do you manage your condition the 99.9% of the time that you're on your own and not in front of a medical professional? And so what we're able to do is provide the ability for individuals to gain that insight, and anytime they have a question, 24/7, to work with one of our amazing coaches who's there to help them understand their condition and, more importantly, find a path to get back on track with their health.
And I know you're working with people who have chronic conditions. Does it upset you that the stock has pulled back over the last 3 months to the tune of, what, 20, 30%?
Well, we had a stellar IPO. It was a landmark, in fact, the largest digital health IPO in history. And we couldn't be more pleased with the response that we've had from the market. The stock traded down a bit after we launched, but it has come back here over the last month or so. And frankly, I think that what individuals have been looking for is for someone to break out and lead the pack. And this is what Livongo is doing in digital health. And we're only now, we went public July 25th. We're less than 6 months into our journey. And what I believe is that as they understand more and more about the company, They'll get to understand the growth curve that we see that we're on and the great opportunity that lies ahead.
Can I just have a quick thought on your partnership with CVS and if you expect that to continue and any other publicly traded companies that we know?
So CVS Health is a fantastic partner. We announced on our earnings call that CVS Health has not only been partnered with us for Livongo for diabetes, but also now is taking on our weight management and pre-diabetes solutions and allowing us to grow in terms of the footprint that we have with them and their clients. We also have a fantastic partnership with Express Scripts, which, as you may know, is part of Cigna. And these channel partners, including some 20 health plans, are bringing our solutions to market to their members in ways that allow us to continue to expand the number of individuals that we can help.
All right. Great to see you, Lee Shapiro. Thank you so much.
Thank you so much, Nicole.
Chief
Appreciate you having us on.
Financial Officer of Livongo Health. Great to see you. Thank you very much.